Welcome to the Small Business Tax Savings Podcast, your weekly dose of accounting and tax tips specific to small business owners. You will be on your way to growing your business and paying the least amount in taxes as legally possible. Here's your host, Mike Jezoshek, CPA.
Hello and welcome back to another episode. Today's topic is how can I maximize advertising and gift deductions? Now, this is part of a bigger series that we've been doing for a while, and it's part of our ultimate guide to maximizing business deductions and write-offs. So if you haven't checked that out yet, I'd be sure to check that out because this is just a small piece in that whole guide that we're doing. You can download that guide at taxsavingspodcast.com/deductions. And today we're going to be focusing on two key parts: advertising expenses and gift expenses. Now, before we get into that, I just want to kind of shoot another reminder or primer about this whole idea of maximizing business deductions. And again, we talk about this in depth in some of our episodes, but just want to keep this concept here. I feel that business owners miss out in this area specifically because they just aren't aware of what's available to them. They think that when people say maximizing deductions, it means they have to go out and buy a truck that they don't need, or go out and buy a piece of equipment or furniture that they don't need. And we're not saying that at all. Well, what we're saying here is let's look at spending that you're doing, everyday spending that you're doing, and how can we turn that from after-tax spending that you do after your money's already been taxed, into pre-tax spending by finding a business purpose for that. So once we can understand that concept, we can start to dive into these different areas, find an ordinary and necessary business reason for these expenses, and take it as a business deduction. So again, check out some of those previous ones that we did specifically on this topic, but today we're just diving into two specific expense categories: advertising expense and gift expense. So let's start with advertising. What is an advertising expense? Very simply put, this would be costs that you incur to promote your business. So I have some examples here: newspaper ads, flyers, TV and radio promotions, media buys. Maybe you're doing online advertising on some big sites. You're doing big media buys. You might have your business cards, postcards. You might do some mailers, or even your logo design would be an advertising expense. You might be sponsoring some charity or sponsoring a local team. That's going to be some advertising expense. Social media, if you're advertising on Google Ads, Facebooks, TikTok, all of those would be an advertising expense. You might do some promotion on podcasts. Maybe you put an ad on a podcast that's specific to your industry. That's going to be a business expense. If you're wrapping your vehicle with your logo, that actual cost of that wrap would be an example of an advertising expense. Maybe you're doing billboards or commercials, or you're putting an ad on a bus or a subway car or something like that. Those are going to be advertising expense. You might be building a website or creating content. Any costs associated with that would be part of advertising expense. Maybe you're doing email marketing, and so you have some content or some people that you're doing some email marketing to. That would be part of it. We see this a lot in influencer marketing. So let's say that you have a product that you want an influencer to start promote for you, and you're going to pay them to promote it on their social media. That's going to be some advertising expense. You might have an event that you're sponsoring. There's a big trade show or something like that, and you want to attack it and you want to get your name out there. That would be an advertising expense. Swag. So I call it swag, but this would be things like your logo on t-shirts, pens, koozies, paper pads, flasks, those types of things. Of course, that's going to be an advertising expense. If you're exhibiting or going to a convention or a trade show, to promote your brand, that would be an advertising expense. Maybe you have contests that you're running. So, for every person that signs up for our email list between this date and this date, we're going to give away an iPad. That could be an advertising expense as well. So when we talk about advertising expenses, there's a lot that's wrapped into that. What we've talked about today are just some examples of things. There's definitely some that we probably missed. But one key thing is that political or lobbying expenses would not be deductible as an advertising expense. So then we have kind of this idea of advertising. What is it? It's promoting your company, your brand, and those are the costs associated with that promotion. What planning opportunities exist around advertising expenses? And when we say planning opportunities, the idea behind when we look at a planning opportunities, we want to kind of say, okay, we get the big ones. What I just listed off, that all makes sense. That's business deductible. That makes sense to us. But where are some things that we may be able to get a little creative with? We may be able to start to dig a little bit deeper and create some of that, move some of that after tax spending into pre tax spending. So, the first planning opportunity when we talk about advertising is moving spending from a charitable contribution to advertising. And the reason this is important is that with the Tax Cuts and Jobs Act, the new standard deduction is increased. So many people actually lose out on getting a tax advantage of giving to charity if their itemized deduction is lower than what the standard is. And so some people don't realize this yet, but the standard deduction got almost doubled after the Tax Cuts and Jobs Act, which means that a lot of people are not getting a tax advantage for itemizing deductions. Now, there's nothing wrong with that because the standard deduction is more, so they'd rather have that. But when you're a business owner, we can get a little creative and say, okay, if our itemized deductions are not going to be enough, how can we move that from a charitable contribution in our business to an advertising cost? And now we don't have to worry about that itemized deduction limit. So if you can find a way to tie this type of spending to advertising, you can take it as an advertising expense, which is going to be more beneficial to you than a charitable contribution. So let me give you kind of an example of what this looks like in reality. Maybe this charity that you're supporting has a local event that they're doing. So instead of just giving money to the charity, could you sponsor this local event? That way you're giving that charity money in some sort of way, but you're putting your logo on items or promotional materials at that event, which could then lead to new business. Another way is maybe you can do a charity drive where for every new client, we're going to donate X amount, or for every social media review or review that we get, or for every person that follows us on social media, for every review we get on social media, we're going to donate X amount to charity. This could potentially be a way to move that money that you're going to give to charity into now an advertising expense. If you can back up and show that your business is growing because of this charity drive that you're doing, that's a great way to move it from a charitable contribution traditionally to an advertising expense. And we do this on our podcast. We do this in our company where we want to grow listeners. We want more people to find out about the tax saving opportunities that are available to them. So we run a charity drive. Now we're going to support charities. We love to support charities. And this one charity we choose to support, we were going to send money to them. We said, okay, instead of just sending money to them, take it as a charitable contribution, let's run a review drive. Can we say that for every review that you leave, or for every review that we get on our podcast, we're going to donate $10 to charity, $20 to charity, whatever it might be. Now that's no longer a charitable deduction, but now an advertising cost because our business is growing from that drive that we're doing. Another kind of planning strategy around advertising expenses is clothing. Now, clothing is traditionally not deductible if it's appropriate for everyday use. However, is there a way that we can put your logo or brand on your clothing and then make it a deductible advertising expense? So again, clothing is traditionally not deductible if it can be used for everyday use, but if we are putting your logo or brand on that piece of clothing, there's potential that we can make it a deductible advertising expense. Now, one key note on this, and you'll find a lot of this all over TikTok. Don't get greedy in this area. Still do that sniff test. Is putting your logo on the inside of a suit coat make that suit coat tax deductible? No. However, would putting your logo on a polo shirt for you be tax deductible? Generally saying yeah. So do the sniff test on this. Think of yourself if you're sitting in front of an IRS auditor and you're trying to explain why this is not a personal expense, but rather an advertising cost doesn't make sense to them. If you say, "Well, I got my little logo on the inside of my suit coat jacket, I put a little logo here," the IRS is gonna say, "No, that's not gonna work out." But you're wearing polos, you're wearing T-shirts, maybe you have a quarter zip with your logo and different things on there, that can definitely get by as an advertising cost. So that's advertising. Things that you're doing to promote your business. And again, kind of planning opportunities. How can we move spending from a charitable contribution to advertising? And how can we use clothing and putting our logo on clothing as a potential way to get more expenses there? The next piece we want to talk about today is gift expense. Now, the cost of business gifts to a current or prospective customer is deductible up to a maximum of $25 per customer per year. Now, you might be thinking, $25 is not much, but that's what the IRS has had and it's been in place for a long time. So examples as a gift expense could be flowers, baskets, wine, things like that. Again, with gift expenses, there's some planning opportunities. So let's go through some of those. And there's kind of three main ones that we like to touch on. The first one is different categorization. Can we find a separate category that would be valid to code an item under? Let's say, as an example, you want to give iPads to your team. Could you load those iPads with content and training materials and various other things? And now that expense is actually a training deduction, a training expense, continuing education expense versus a gift. You know, could that item be used to do work instead of for personal use? Well, now it's no longer a gift per se, but now we can categorize it under something else. So think of this area as different categorization. Is there another category that we can take this expense under that makes sense still that we can move it to? The second planning opportunity is a married couple or family. Now, the $25 limit that we talk about is per individual. So if you're gifting to a married couple, you could double it to $50. Now, that comes with one kind of assumption is that you have to have a relationship with both, both individuals that are part of that. So let's say that you run a shop and, one spouse always shops there and you don't even know who the other spouse is. You couldn't say, well, I'm going to gift $50 because it's going to be a share between them. That would not work. You'd have to have a relationship with both of them to move that 25 limit to $50. And the third kind of planning opportunity around gifts is branding and logo. Is there a way that you can put your logo or your brand on specific items and treat them as an advertising expense that we talked about earlier to move it from a gift to actually an advertising expense? Now, there are some categories or some items that the IRS does not consider a gift. And that would be an item that costs $4 or less that has your name on it. So think of things like pens, desk sets, accessories, things like that. They're under that limit. This is going to be an advertising cost. No gift on it. Signs, display racks, or other promotional material that you can use on business premises of whoever you're gifting it to could be moved as an advertising expense. So again, today we talked about, this is just kind of a nibble into some planning opportunities to help you maximize your deductions in your business. And again, we have an entire series that we're doing it. The next few weeks, we're going to be deep diving into more specific categories. So check out our ultimate guide to maximizing business deductions and write-offs, where we go through all of this. We have a very good, a very detailed initial concept article that kind of explains this in detail, this whole concept of maximizing deductions. And then after that, we kind of dig into various expense categories and how you can maximize them. So if you want to check out that guide, go to taxsavingspodcast.com/deductions. Again, today we wanted to kind of deep dive into both advertising expenses and gift costs and how those play into this idea of maximizing deductions. Again, advertising, what we talked about, there's a lot of different activities, a lot of different things that would count as this. Basically, it's just promoting your business, your brand, your company. And we talked about a bunch of examples there, and we talked about a few planning opportunities. How can you move spending from a charitable contribution to an advertising expense? And how can you use clothing to maximize your advertising expenses? Then we talked about today gift expenses and how we're limited to $25 maximum per individual as a gift. And this is a limit that's been around for a while now. But we talked about different planning opportunities around this. Is there a different category that you could categorize this gift under that would be valid, which we could increase that amount? Again, we gave this idea of you want to give iPads to your team. Can you download it and cram those iPads full of content and training material to say, hey, we're giving this to our team to do training. We want them to be more involved and understand our business, and that's going to be a training expense and not necessarily a gift expense. So is there a different categorization that you can do? We talked about whether you give to an individual, if you can double that, if you're giving to a married couple and you have kind of a relationship with both individuals. And we also talked about branding and logo. And again, this kind of ties into that different categorization, but is there different ways that we can use a branding or logo to help that as well? Again, I hope this was helpful. Over the next couple weeks, we're going to be deep diving into even more topics, specific expense categories. But again, don't forget to look back. and what we've covered already. We've had a general episode where we talked about kind of general expenses that don't make sense to break out into one specific episode. And then we also had just the overall concept. And I think this is probably one of the most important episodes in our guide. So be sure to check those out. You can find all of this at taxsavingspodcast.com/deductions. And finally, one last reminder, remember to do the sniff test on this. Think to yourself, and this is what we always tell clients and listeners of the podcast to do, always think to yourself, if I was standing in front of an IRS agent and I was trying to explain why this business expense or the spend I did was a valid business deduction, does it sound legit? Do the sniff test. If you can find the proof to back it up, do not be afraid to take advantage of it. Make sure you document that proof on why it's a business expense and take advantage of the opportunities that are available to you as a business owner. Thanks again for listening to this episode, and I will see you next week when we deep dive into even more specific expense categories. Thanks, everyone.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.